what is technical analysis. Most people think technical analysis is about predicting where the prices will go next, but in reality it is far more practical. It is a structured way to make decisions under price uncertainty. So by the end of this video, you will be able to clearly define how you can use charts instead of treating them just like magic. So stay with me till the end. I will share one pro hack that professionals rely upon. Let's just figure it out. So technical analysis is the study of price behavior over a period of time. It is not to predict the future with certainty, but to improve the quality and the timing of your decisions so that you can enter and exit from the market at appropriate times. Now think of it in this way. There is one aspect, fundamental aspect. There is another aspect, which is technical aspect. So fundamentals will help you understand what to buy, which stocks you should be buying. That is the information you should fetch from fundamental analysis. Then what does technical tell you? Technical analysis answers your question about when to act, about timing the market, when you are going to take entry in the market and when you are going to exit from the market. So that comes from technicals. So just give you one example. Suppose you have got 50 stocks in a particular index. So let's call Nifty 50 index, where we have got 50 stocks. We will see which of the stocks are top 8 fundamentally good stocks. So let's pick those 8 stocks out of 50 Nifty stocks. Then on the second aspect, we will see what is the price, what is the chart pattern for each of those 8 stocks which we have shortlisted. Now we are going to time the market so that we can enter in those 8 stocks at appropriate point of time. And once we have entered, we will also define what is the appropriate point of time when we should exit from those stocks. So I hope now you understand what is the difference between fundamental and technicals. We will go definitely a lot deeper into these topics, but for now, stay with those definitions. So in the real markets, timing has got a significant impact on outcomes. You can have the right view on a company or asset, but still lose if your timing is not perfect. Now let's look at the fact about what is the difference between trading style of a less experienced professional and a seasoned professional. So less experienced participants, what do? They generally enter the trade too early during pullbacks, or they enter too late after the extended moves have done. So let me just show you what do I mean. So look at this stock. Stock has been going up and then there is a pullback, right? Similarly, if you look at this part, there is a stock, this stock is going up, now there is a pullback. So many times what will happen, inexperienced traders will just enter at this zone. They will not wait for the confirmation. They will not look at other parameter details and any other technical factors because price has crashed a bit, so they will just enter here, and that is a wrong approach. So that's where we are saying that many retail investors enter too early during a pullback. Are you in the stock markets but still guessing your next move? I am from Uncover Markets and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day, or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. Now, what is the second mistake which inexperienced traders make? So second mistake is, so initial part of the rally, they miss out. And when everyone is talking about a stock moving up, when the rally has been going up and up, so they will enter somewhere here, they will enter somewhere here. So these are the zones when rally is about to fizzle out. But traders enter too late into that. So the inexperienced traders enter too late into the market up move. Now, how will a more experienced participant look at this chart and where will he enter in the market? So an inexperienced trader, once suppose we are talking about this leg, he will see that market has gone up. He will wait for a correction, but still he will not take the trade here. He will again see whether market is going up. Now he will see whether it is giving the confirmation above this level or not. If it is not giving the confirmation, then he will leave the trade. He will not buy it, but he will wait. So again, an inexperienced trader is waiting here. But now when market goes up, when it breaks this line, he will get the confirmation and he gets into the trade. And after that, what happens? Once he has gotten into the trade, because he knows the philosophy around this trade, he knows that this was the zone which was a kind of consolidation zone. So he will wait for that, and once market goes down, he is not going to panic, and he does not panic, and after that he will see that market has started provide the run up. So this is a classical way an experienced trader see market differently than an inexperienced trader. So all of these aspects we are going to cover in the market. So all of these aspects we are going to cover thoroughly in our course. So now we have talked about experienced trader will wait for the confirmation. He will look at the particular areas when market is behaving in different ways, and then he will wait for confirmation, and then he will take the trade. So now let's look another demonstration. Now look at this chart. We will be talking from the perspective of an experienced trader. Market has seen a sharp run up here, and after that it has gone into a consolidation zone. So if an inexperienced trader comes up, he might be thinking that, okay, now let's consider this chart, which is for gold. An inexperienced trader will just look, okay, that market is going in a particular direction. But an experienced trader will look at different segments of this chart. He will look at this segment differently, he will look at this segment differently, and he will look at this segment differently. So see what is happening in this segment. Here the price is consolidating in this range. When price is going to move up, then people are providing the supply, and market is going down. When price is touching this base, then people are coming again to buy the stock. So similar way, there is a price pattern which is a classic pattern which is coming up here. So more than the direction, what matters is the behavior of the price at particular point of time. And can you connect the dots? Price behavior at this point, price behavior at this point, price behavior at this point, and then price behavior at this point. You need to connect dots at this point, and then you make a firm opinion that market is going to go up, and then you buy the stock because market is going up. Similarly for the downside also, similar kind of analysis you do for the downside also. So now to internalize these concepts, here is a simple action for you. Just write one sentence. Are you in the stock markets but still guessing your next move? I am from Uncover Markets, and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day, or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. Do a simple exercise. This will internalize these concepts within you. So first you write, I use technical analysis for what? And then you mention that I use fundamental analysis for doing what? So once you have got that clarity, that means you have understood a very clear distinction and very foundational concept for stock market investments. So now here is something which many professional traders overlook. Professional participants. So now here is a pro hack which I mentioned earlier. So here is what many traders overlook. Professional participants don't use charts to predict. They use charts to confirm the behavior of price, confirm behavior of trend. So instead of asking where the price is going to go next, they will be asking what the price is doing right now, and does that price fit well within their framework. So when I say framework is nothing but a set of rules. So suppose you have created a framework which only have 2 rules. You say that based on first condition, I will take a trade on the upside. Based on the second condition, I will take a trade on downside. Now, if both the conditions are aligned in such a way that they suggest that market should go up, so that means with your framework, so this is your framework which is suggesting you that both the inputs which you are getting are saying that market is going to go up, so you will buy. So similarly, if both the inputs are suggesting you that market will crash, then you are going to exit or you are not going to buy. Sometimes problem comes that one signal is saying that market is going to up, second signal is saying market is going down. What you will do in that scenario? One thing is that you will see which one is the stronger one. Secondly, you will see, can you just wait and don't take the trade until and unless both of the indicators point in the same direction. So you have got 2 options: either stay away from the market until both the indicators align in a single direction, or you choose the direction where the stronger of the rules is pointing towards. So that's it for this video. In the next video, we are going to cover price action versus indicators versus news flow, because not all of these indicators carry equal weight. Thank you.